You can and you should outsource accounting, but the thing you can't outsource in the early days is critical thinking. Help me get to a yes. Partner with me to better understand the problem.
When do you think it's too early to hire a finance leader? When's too late if you're a startup in hybrid growth?
I think that's the first hire I would make. Finance can connect the dots. You can look at what's happening operationally in the sales team, the R&D team, identify what's working, what can we double down on.
You've seen so many companies. You know what good looks like.
Welcome to Builders, a video series from Kleiner Perkins. Each episode, Leigh, Marie, and I sit down with founders and operators building the products and tools that will define the next decade of technology.
We keep it simple. Fried chicken, beer, and raw, unstructured conversations with the people that we call when we're trying to figure out what's next. These are the conversations that we have behind the scenes at Kleiner Perkins, and now we're excited to share them with you.
Both of you guys were investors before finance leaders.
Yeah.
Do you feel like when you hang out with other finance leaders that it's just you guys think differently, or has that informed how you guys do your role or function?
I mean, there's two things. I think first of all, background in finance is super helpful. I'd split it into different areas. Like banking, you have the basic tools to figure out how to do the job. Private equity, you figure out how to think strategically, make decisions to drive the business, spin up new initiatives, et cetera. Public market investing, I would have thought, I did short selling basically for 2 to 3 years at Viking. I would have thought that was completely irrelevant to my job, but actually it's at least for me, been super helpful because you have to think in a contrarian way and be willing to kind of go against the consensus. So when I'm working with Parker and he has a strong view, I'm able to take the opposite side of that in certain situations, which I think he likes. So I think all those skills are helpful in an operating role. I think the biggest disconnect when I chat with investors or we chat with board members is there's the theoretical answer around R&D ROI. It's so simple, just calculate the revenue compared to the cost and forecast it out. Easy in theory, very difficult in practice. So I think there's some of that where it's just operationally, how do you partner cross-functionally?
Yeah.
That makes it a little bit tougher when you transition.
I think actually it's one of these things that I think is underrated, that investor skill set. And especially for me, I come from a venture capital background. And I'd done it for almost a decade. And what you do in a venture firm is you're part of an investment committee. You go to IC. Your entire job is to influence a group of highly opinionated, really, really smart people with facts, data, and conviction. When I think about what I do day to day, at Glean, it's a lot of that, right? It's the job of a finance leader really is, I think, getting everyone to row in the same direction and really proving your point with, I think, analysis and data. So I think a lot of that, translated, and it helps a lot. And I think part of it too, and I'm sure Adam, you experience this, during your time at Rippling, you've seen so many companies. You know what good looks like. And I'm not saying you know the answers to the test, but you kind of know what great looks like. And that really helps inform your point of view. And just seeing other companies as an investor and what they've gone through and how they solve certain problems, I think it's just been super informative to help you just pattern match as an operator. So for me, it's been super, super valuable.
That's cool.
Yeah.
It resonates a lot because I have been on boards where I've seen other investors say oh, your sales reps aren't hitting plan. Maybe the quota is too high, too low, whatever. Just fire all them and just find sales reps who can't hit plan. It's very easy, right? Or hey, your quick ratio, your magic number is off. Just fix it. It's very easy. Finance leader, go help them do that. And I think you quickly realize actually it's very messy. People are very messy. Organizations are very messy. And figuring out how to drive that alignment is not the easiest.
No, for sure. I mean, I think one advantage is that finance can connect the dots. There's the financial plan, and you can look at what's happening operationally in the sales team, the R&D team, the customer support team, and help people understand how does what they're doing layer up to the overall financial results, which can be tough to do. The thing that you have to watch out for as a finance leader is, to your point on rowing in the same direction, there's just different perspectives. There's a bunch of things that the salesperson has to worry about, which are totally foreign to what finance thinks about. Similarly for CX, for R&D, and so on. And so building the empathy and be able to balance wear both hats. I feel the finance person really owns the goal of hitting the plan for the year. That's a numerical exercise, but also understanding operationally, how do you work with the leaders to make that happen and deal with a bunch of issues, whether they're people issues, hiring issues, whatever they may be, to make sure that they are able to operate.
Maybe say more about that, just because I always get the sense that the finance team are the bad guys. Yeah. It's they're coming in you can't have that headcount, you can't have that budget. Is that true? Do you feel like that sometimes, or what's your intuition?
No, I mean, I'd start out by saying I view the team's main goal, there's obviously forecasting, budgeting, et cetera, but the main value that we add as a finance team is to find ways to deliver growth for the business. So I think we approach everything with that mindset around, here's the top line plan, let's partner with sales, identify what's working, what can we double down on, where should we be reallocating resources between different areas of the company. And so we kind of approach it with that perspective. And so a lot of times what we're hoping for is that we're seeing success in certain areas. We reforecast on a monthly basis. We're seeing, we might be $10 million ahead of plan. And the discussion is, hey, do we let that $10 million drop to the bottom line, or do we take 50% of it, reinvest it in X, Y, or Z initiative that are working really well? So that's kind of how we think about it. So I don't know if that's similar to how you approach things.
No, it definitely is. I mean, look, I don't want to come off and say that we're always saying yes and that. Definitely there is a part of the finance job, which is helping the company make really fiscally responsible decisions. No question, that is a core part of the job. But I always kind of think about my job as help me get to a yes, right? Help partner with me to better understand the problem. Supply me with the data if I don't have it to help make the case for you to make this make financial sense. Because there is a reality of what we do where I think just you can't be an expert in everything, and there may be something that this individual knows about their function that you're just sort of missing. It may not show up in the near-term numbers, but there's just something about it where you need to dig a little bit deeper. So I always view it more in the context of how do we partner with all the other functions? How do we sort of understand, the reasons why they're asking for what they're asking, and how do we make that case? And some cases you do dig down and it doesn't really make sense, and that's okay. But I view it more from that lens of sort of partnering, get to the right answer together versus me being the gatekeeper of yes or no of whether or not you're going to get this headcount or these funds.
Yeah, right.
I'm actually curious, how do you get started? So I come from, before I was an investor, I was an employee at scale very early on. So it was a few people. And I mean, quite frankly, and I think of this with other early stage startups I work with, a lot of the financial stuff is in the very early stages, and the systems aren't set up, the metrics aren't set up. I'm curious, maybe when you entered your companies now or companies in the past, what are the things that, okay, this is the plan, first week, first few months, what typically surprises you?
I have a framework for this actually. So I use the Maslow's hierarchy for a lot of different things, but I think it fits really, really well with finance. So Maslow's hierarchy, it's a pyramid, kind of, need to do the bottom stuff to get to the top stuff. And the framework that I've always had in terms of, this is not necessarily the cadence in the order in which you should build the team, but these are the core competencies you sort of need to get right first. So at the bottom, I think it's accounting, right? If you don't have accurate, historical financial data, financial statements, you can't really do your job as a finance person. So I think it's really, really important in the early days to just build out accounting, get that right. Once you have, I think, clean historicals and clean financials, you can then use that to project out the business, which is where then you move on to sort of FP&A, which is, I think, a really critical part of what finance does. Looking at the past to sort of infer the future. And then I think look, once you have sort of the data right, the forecasting muscle right, I think that's when finance gets really, really exciting. And then you're able to do, what is called strategic finance, which is using that ability to forecast to help the company make, sound data-driven decisions. And I think that's where it gets really, really fun, because you move from this mode of I am reporting the business to I'm running the business.
Right.
And the thing that I think is really, unique about finance is every org within the company speaks a different language. Engineers think differently than salespeople. They think differently than marketers. They think differently than product folks. But I think everyone intuitively understands dollars and cents. So when you put things and decisions in the context of dollars and cents, it's kind of like the great equalizer to get everyone on the same page. You can only do that when you sort of build up to that ability, which is again, sort of, accounting infrastructure, FP&A muscle, and then the ability to apply all of that through StratFin.
Yeah, I agree with that. I think the value add for finance, which Michael's hitting on, is really how do you make decisions, drive growth in the business, and do that in a proactive way? Because I think there's the view of hey, we want to forecast the business accurately. And the reason you want accuracy is because there's a standard that public companies are held to, and we need to be within 2% or whatever of revenue. Actually, the way that we look at it, so first of all, we don't judge our accuracy based on the total revenue number. We look at net new ARR, and then we drill down into the subcomponents. So we look at new logo sales by segment. So Rippling has over 100 sales segments. We look at cross-sell. We look at net expansion contraction. And the reason we're really focused on understanding the forecast is because if that's accurate at that subcomponent level, it means you understand the drivers of the business. And that's like necessary in order to then inform like what do you do and what actions do you take. And then what we're doing on a continuous basis once we're confident we understand the business is we're saying, hey, let's forecast monthly what's happening with the business. Do we think we're ahead or behind plan if we forecast like recent trends through the rest of the year? Based on that, again, should we make decisions to add additional investment, pull back? Do we reallocate within different areas of the business? And I think that's where, when you think about that kind of approach where it's proactive, looking at leading indicators, forecasting into the future, versus like there's a version of the world where you kind of forecast, you see the results manifest, and then you take action based on that. The difference between those two modes can be like a year plus, because think about the pipeline can take 6 to 12 months for a deal to work through the pipeline. To see that show up as ARR, then you have to hire a sales rep, then you have to ramp that sales rep, that's another 6 to 12 months. And so you can actually, I think as a finance team, really unblock your company and move like a year or two faster than a company that operates in a reactive way.
When do you think it's too early to hire a finance leader? When's too late? If you're a startup in hyper growth.
My view, which may be different than yours, I think the first hire you want to make is a finance leader who has that strategic finance background, and you would outsource accounting to start. So accounting definitely needs to be right, but I think you can outsource that function. Early on, you want somebody who is the banking private equity background, who's a generalist, Swiss Army knife, probably somebody who's seen another startup before. I would be cautious about taking somebody directly out of investing. I think it's just too high of a probability. They don't like working in an early stage company. 1, 2, they just don't know what to do at a company. They've only been on the investing side of things.
Wait, it's not both of you guys though? You're saying for early stage?
For early stage,
Okay,
no, I went to, I had a lot of help getting where I am. I think that's probably the first hire I would make, because I think the value in the early stage is not, especially like Series A, seed, it is not like forecasting the business. It's understanding unit economics, identifying opportunities for growth, really being the thought partner to the CEO. And I think that's like that banking private equity skill set. But a generalist, you don't have to be deep in R&D finance, CX finance.
And I guess when do you think you should bring on that type of person?
I think you bring on that person as soon as you have a product and you're starting to sell, because then you are thinking through, how do I scale the product? What are the margins on that product? What's the cost structure of my go-to-market team? But I don't know if you have a different point of view on that.
No, actually, I agree. I think like what you said is right, which is when I was going through like the Maslow's hierarchy thing, that was more sort of like core competencies and things you need to get right. But from a hiring cadence perspective, I think you're spot on. I think you can and you should outsource accounting, but the thing you can't outsource in the early days is like critical thinking, like this attention to detail, understand like the economics of the business and just all of this stuff, which I think requires an individual that I think 1 is very, very comfortable in spreadsheets. 2, is comfortable with just like a mess, right? The stuff that like early stage startups are it's just not clean, right? Even growth stage startups, like, for us, it's like some of the data is kind of messy. So you just need someone who's like very adaptable, ambiguity. And it's almost sort of like this like general purpose, like finance athlete, almost the way I kind of think about it. So I completely agree. And that's usually the advice that I give to folks that ask as well.
Yeah, 'cause I think like the very high level arc, the way I think about hiring, it's like you start out generalist, strategic finance, outsource accounting. Then at some point you progress to a stage where you want to bring in a controller to in-house accounting, get their arms around the financials, still generalist finance team. And then kind of like the next step after that is you have strategic finance start to separate from central FP&A. So you have budgeting, kind of systems, like that kind of thing in FP&A. Specialized finance, so leaders in R&D finance, CX finance, so on and so forth. You have a biz ops team probably stood up at that point, whereas previously biz ops and finance were sort of commingled, and then you scale the accounting function. So that's like the high level arc if you think of like seed to like Series C, Series D type company.
That makes sense.
You mentioned, Adam, 100 revenue segments.
Yes.
How in God's name do you keep that all together? Like, are you drilling into each one every month, quarter, et cetera?
Yeah, so I mean, like what we do is we have a systematic approach to each one. So we have a set template where we understand funnel metrics. So we understand cost per lead, conversion rates down through the funnel, win rates, ACV, and so on. So we actually have a programmatic approach to say like, this is how we evaluate the segment. Obviously, that's also the driver of the model. So we can kind of understand or project the segments at that level. And I think the key thing is we align everyone around, hey, based on the quota build, based on the target unit economics, which for us, we're targeting various like metrics, usually variable CAC payback. We say, hey, like these are the funnel metrics that need to be true. And then every month we look at actuals compared to the target and things that are materially off plan. We actually have a sales and marketing MBR every month where the main goal is really to say, hey, do we hire the next class of reps in all these different segments? And if no, should we move a person from this segment to another segment where we're seeing more success? And so that's kind of like the way that we operate. But you do have to have like a real structured system to do that, because you do have to make operational decisions to staff 100 different segments, which have different skill sets across, for us, IT, HR, finance, solutions consultants, international, different geographies, things like that.
Does that resonate with you, Michael? From Glean's perspective, or are you guys just obviously not as many products?
I feel like I'm learning a lot. To Adam, MBR, I got to do that. Our business is different. So like my understanding is like Rippling has more, like you probably, at least when you first start engaging with customers, they're like SMBs and it's sort of like land, or is that not right?
We have a mix. So we sell to everything from a 2-employee company on up to 2,000 or 3,000 employee companies.
Got it. So our business is different. Where like, I think for us, we're increasingly going up market. As such, like the metrics, which means that, the types of customers that, we are engaging just fundamentally end up being like larger. So a lot of like what we focus on and like the metrics that we track are really like, understanding the pipeline. Like at the end of the day, like we're a sales-led company. That is sort of the biggest indicator of like your ability to hit your plan for the quarter. So the things that we look at are like, what is the shape, like there's obviously like the coverage ratios, all of that stuff that matters, but like what is the composition of that pipeline? Like when you enter a quarter, how much of that is like late stage versus early stage? Like you have the same amount of pipeline, but depending on that composition, your quarters are going to look very different. In addition to that too, like for us, we are very like enterprise sort of focused. So it's sort of like the composition of like big deals in your pipeline for us that matters. Like there's just a direct correlation at Glean. If we're gonna smash a quarter, like there's a certain percentage of like the opening pipeline that needs to be deals greater than like $1 million, right? So those tends to be the things that we focus on. But I think we are also just like earlier stage than you guys, and like these are all, I think, these operating rhythms that we're currently building out. So yeah.
And Adam, is it true that a lot of the like Rippling board deck, it's so systematized now, it's basically automatically generated and immediately sent out to investors like as soon as the quarter closes?
All 200 pages.
Yeah.
You have a 200-page board. That's amazing.
So I mean, when I think of like gold standard of like, companies that just, and importantly so, especially kind of given, Rippling's customer base, just have like such visibility and transparency when it comes to how things are going and know how to debug and kind of figure out where problems are or where opportunities are. Rippling certainly comes to mind.
Yeah, I think for the board deck, like it's definitely evolved. So it's not fully automated, but we have invested heavily, back to my point on specialization, we have invested in a true FP&A function where we have a different type of profile where we hired somebody in who has a systems background. So they are a specialist in Anaplan. They really invest in making sure we have clean data sets that the whole finance team can tap into. Within Anaplan, we're automating budgets versus actuals, a bunch of our reporting. We're using actually Rippling's own product, it's called the Data Cloud, to produce a bunch of the charts that go into our board deck. So all that is automatic. I think the one thing that has been newer in our board deck, and a big push from actually Mamoon, has been to really use the board deck as an opportunity to tell our story like we would to the public markets. So one of the things that we did actually this most recent board meeting, which was pretty cool, is we essentially now have a lead-in section of our board deck, which is roughly 20 to 25 pages, which is essentially what we'd show investors as part of our public market investor presentation. And it really had us think through, okay, if we were telling our story to the public markets versus board members or people with access to private information, what are the metrics we'd show? What are the elements of the story that you would have to simplify and tell in a little bit of a different way? How would you give the building blocks to analysts to build a model and to kind of like map that to the strategy, if that makes sense? And so that was like a pretty cool exercise and a new addition to the board deck, which I think was like pretty useful. So now our structure is like we lead in with that kind of like story and we update it every quarter to kind of frame our quarter's results. We have ongoing guidance where every quarter we're putting together guidance, looking at how accurate we were. And then we have like, I'm sure like you guys do, kind of strategic topics for the board and then the standard metrics pack.
Yeah.
This is interesting. It's actually a good segue into like metrics just generally. Do you find there are some metrics that are just like wildly overrated and maybe conversely maybe underrated? I know there's a certain metric Adam has that I find was interesting, but maybe start with you, Michael.
Yeah, I think for us, I think all metrics are good to track. I'm not gonna opine on like what's overrated, underrated. I think more data is better personally, but
Spoken like a good CFO.
Yeah. It's like they all have some merit. But the things that I think like are probably more valuable and important are sort of separating what are your I think your leading indicators versus your lagging indicators. I think as an investor back in the day, like I would just talk about SaaS metrics constantly, right? Your NDR, your magic number, like all of this stuff. And these are important metrics, right? But they're all sort of like lagging indicators of the business, of what's happened in the past. You know, the things that I think are probably a little bit more valuable are just focusing on like what are these like leading indicators. And for us, like we talked about pipeline, that's obviously like a leading indicator that matters. You know, pipeline generation is another leading indicator. But also like on the engagement side, like things that we look at are like our DAU Miao, like how is that holding? You know, we also look at even things like token consumption, like how much are our customers using our AI, you know, features. When we sign new customers, like how fast are they getting deployed? Like what is seat utilization? I find that that's actually like a really incredible leading indicator of whether or not you're gonna have really good retention. So I would say like those are the metrics that I like, but like I think lagging indicators also have merit too, right? Like, you know, we spend a lot of time because of our business model being sales led, you know, we look at, you know, sales productivity, you know, AE, you know, participation, like really analyzing the sales team. But, you know, I think you get a lot more insight when you focus on sort of like the leading versus the lagging, I guess would be what I say.
I like that.
Yeah, I think if I were to pick maybe part of the question, which is what metric don't you like? I think one that is pretty common that we don't particularly like internally is rule of 40. Obviously very common, like public market like rule. I think like the challenge for me with that is a few things. Like first of all, equal weight of growth and profitability. I think Bessemer put out an article around rule of X, overweighting growth, because like market values growth more, it's harder to reaccelerate growth. If you're growing quickly, generally profitability takes care of itself, provided you have good unit economics. So like that's like one issue with it. And then I think the second issue with that metric is that it treats all burn the same. So if, for example, you're growing very quickly with efficient unit economics, you could have a worse rule of 40 than a company not growing at all with terrible unit economics. And so that doesn't make a whole lot of sense. And so internally, it's more complicated, obviously, but we've broken it down into saying, hey, we want to understand the underlying building blocks. We look at, are the margins high? Are the gross margins adequate? When we look at CAC paybacks, looking at it fully loaded or with just the variable portion, like the incremental cost to acquire a customer, are the CAC paybacks attractive as a proxy for LTV to CAC? On R&D, we actually do tag R&D costs down to the product level, and we look at R&D dollars spent relative to the net new ARR generated by that product. And those are really the key metrics we look at, because the view is like, hey, if you have good unit economics across those different cost buckets at high margins and you're growing quickly, profitability will take care of itself. And that's also, I think, probably the true north, like right answer in terms of how to generate the most value as a business. But a lot of times, interestingly, approaching things that way leads to a different answer than if you were just to optimize for rule of 40.
Right.
So.
And say more about, I've not seen many new metrics that I thought were intriguing, but say more about growth endurance.
Yeah, growth endurance. So this is a metric, I think originally it might have come from Green Oaks.
Oh, really?
They have a whole deck around it. And so the gist of the metric is, so growth endurance, the way it's defined is you basically look at growth rate this year compared to the growth rate in the prior year. What is that percentage? So are you growing 90% of the growth rate in the prior year, 80%, and so on and so forth? And their premise is like actually that metric is one of the key indicators of what will become a very, very large company versus a much smaller one. So I think the case study they look at is they look at Box versus ServiceNow, which were at one point growing at the same growth rate at the same scale. And I think ServiceNow had like 85% growth endurance. Box had 70% growth endurance, which is a 15% delta, which doesn't seem like the biggest deal in the world, but when you compound that over 10 to 20 years, obviously one's like hundreds of billions of dollars and other is like a $10 billion or less market cap. And I think like the math they back into is if you're a 100% grower with 70% growth endurance, you're worth 50x on a revenue multiple basis to earn like some fair return. And if you're 100% grower with 90% growth endurance, you're worth 1,000x. So two businesses that kind of are growing at the same rate today that have different prospective growth endurance levels and have dramatically different outcomes. So we kind of focus on growth endurance for that reason. And I think the way that you build up to a high growth endurance or how we think about driving that metric, it's really a product of a lot of things you do. It's, are you launching in new geographies? Are you building new products? Are you looking at different levers you can pull around pricing? How do you think about the composition of driving NDR? And like there's all these different growth vectors, which I think are longer dated. So you can't pull these levers and build a new product and have it be meaningful and drive growth endurance next year. You have to kind of be thinking 3 to 5 years out. And so when we look at growth endurance, there's both the current year performance, but we're also looking at our long range plan and saying, hey, how do we maintain that 80 to 85% plus level on a sustained 4 to 5 year basis and beyond?
That's awesome. I imagine you can take that to the extreme and say, let's burn as much money as it takes. Like we are not going below 80% growth rates. Is that kind of the maybe the corner case?
No, so I mean, I think it's important to always have guardrails.
Okay.
And so for us, there's clear guardrails back to the unit economics point around like sales and marketing. We have a firm guardrail of 18-month CAC paybacks.
Cool.
On R&D, we say, look, there's like set ratios based on the maturity of the product, nascent, mature, and so on, of like incremental ARR that product generates relative to the R&D spend. And if you're below that benchmark, we actually freeze headcount for that team. And so we're pretty strict on that. So I think like the way I'd maybe frame it is maximize growth, hit that growth endurance number subject to guardrails around sales and marketing and R&D spend.
Got it. The other topic that came to mind as you think about that is just like the growth versus efficiency trade-off. Like every founder, every executive is dealing with this right now. Yeah. Every AI company is going 0 to 100, so they say.
Yeah.
What do you say to someone, maybe a sales leader or a product leader, like, hey, I just need this new headcount for XYZ new initiative that is going to 10x growth in a couple years? Like, do you guys feel that tension more today, or like, what's your reaction to that?
I mean, definitely. I mean, I feel like we're all, I don't know about you, but in the middle of annual planning, and this is like a very common conversation that you have. I go back to sort of what I was saying earlier, where if you think that is true, like help me build the business case to understand it. You know, there are segments that we are not in, you know, there are geographies that we are not in that may warrant like additional investment. And, you know, generally my thought process there is to sort of approach it with an open mind. But at the end of the day, like I do agree with what Adam is saying, which is like growth is what ultimately does matter. But I think like responsible and also like enduring growth is what matters too. So if you are, you know, spending $2 to generate $1, I would say like that's not great. If you're spending $1 to generate $1, I think that's a little bit different. We do have those types of conversations, but you know, it does, I think, you know, involve a lot of, I think, exploration and partnership with other teams.
And I guess maybe say more about that partnership. Like what are good practices if you're on the product team or on the business team, like for working with you?
I think like this is kind of where like the background of being a VC helps, where we all have the same objective at the end of the day, which is we want to build a really big company that is valuable at the end of the day. Let's get to that answer together in an intellectually honest way. So I think it comes down to first going in with just like a really open mind. Like if you sort of have this face of just it's default no, or you know, I'm finance, I control the budget, like that doesn't work well. What I find is like you need to make sure that you're on the same equal playing field, or at least the other person feels that way, and ask like genuine, honest questions. And you know, I think there is something to be said about how like, you know, we are in a world where I think like optimism is rewarded. There's a lot of things where like I've just been proven wrong. I'm at Glean, and ultimately like I'm glad I sort of made the call to sort of, you know, allow that headcount or that initiative. But I think it's just really having an open mind and, you know, being able to partner closely with these folks.
I think like one thing too is just giving people a clear sense of success metrics. So the way I think about it is we have like a long range plan which ladders up to a sustainable financial profile that sets the context for budgets for different teams. And within that budget, you say, look, you have this pot of money, optimize within that. So if this is a very high ROI activity, like clearly that should be within the budget. Something else then falls below the line. And going through that exercise, a lot of times what you'll find is if you force the trade-offs within the function, it will squeeze out a lot of lower ROI activities that they decide, hey, like actually given the other things in our opportunity set, given frankly like management bandwidth, it's not just like a dollar problem either. It's like if we're gonna spin up a new initiative, it's not as easy as hiring 5 new engineers. We need like leadership time to make sure that that money is well spent. So a lot of times I feel like if people understand the guardrails, go through that forcing function of really from a zero-based budget point of view, squeezing out, hey, like what are the lower ROI activities, that resolves some of the issues that you're raising where people are saying like, hey, like we need to spend additional money for this activity. I think the wrong framing is to say we need to spend it incrementally. It's more so like, let's look within and work within the budget that we have. So that's like one tool that we found helpful at least.
I think the force ranking thing is actually super helpful, where it's like if someone has a budget envelope of let's say like 10 heads, but they're asking for 20. I think just going through the exercise of literally like, let's force rank these like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and really understanding like, okay, why is one thing below the line and one thing is above the line, I think is actually really helpful to understand like, what are things that are absolutely critical and what are things that are maybe more nice to have. And like, I think like once you take someone through the exercise of here are the most important things to here are the least important things, by the time you get to the least important things, I think it's pretty telling in terms of like whether or not this is something that you truly need or maybe something that is more of a nice to have.
And the biggest thing for those discussions is do not focus on incremental headcount, look at total headcount. When you're getting to be a more mature company and we have like 5,000 people today, and if we're growing, I don't know, 20%, so adding, a couple thousand people, you still have most of your productive resources at the company today. So it's sort of pushing people, because like the natural state of an org is to continue with inertia, continue to work on the things that are based on decisions maybe made 3 or 4 years ago, where it's no longer the right decision. So you really have to push people to say, hey, like, are we spending money in the right place with these resources, or should we shift them to someplace else? And by the way, those are the people who are already ramped. You can move immediately and are probably going to make the most difference when you think about the next fiscal year or the year after.
So almost like a zero-based budgeting.
Yeah.
Say, okay, this is the initiative we want to hit. What actually headcount do you need from like white blank sheet of paper kind of thing?
Yeah, exactly.
Have you ever had that where it actually like declined in headcount, or you felt like it was just a lot less than they needed?
We do with certain teams.
Wow.
So we've seen with certain teams, like we look at a team, it's overstaffed, and we actually migrate headcount from one initiative to another. And so that team's growth year over year will decline. But then when you look at it from a ARR relative to cost perspective, it makes sense.
Totally. You talk about, you see 5,000 people at Rippling today?
Yes.
And how many are at Glean?
We're about 1,100.
Okay, so you guys are in the thousands.
He's the better CFO.
How do you, so like, entropy creeps in as you get to probably more than Dunbar's number. At 1,000, like we're talking serious entropy. How do you keep like a high functioning operating cadence, like a high performance culture at that scale when you just physically cannot get in front of everyone and say, move faster, let's go?
We have an operating system at the company. So like very high level, we start out the year in the spring with long range plan where we're looking out 5 years. Goal with this plan is to both pre-plan, I would say, for fiscal year +1, so set preliminary tops-down targets for the following fiscal year, but also identify, are there any gaps back to the plan on growth endurance when we extrapolate out to 5 years from now? Do we see a gap in the plan and things we need to invest in today to be meaningful enough in year 5 to actually plug that gap? So that's long-range plan. Then you move to annual operating plan, which Michael mentioned he's going through, we're going through as well, where you kind of like resolve the tops down versus bottoms up and hopefully land in a similar place to the long-range plan. But then after that, when you get into the day-to-day execution of the company after annual planning, for us, there's probably 3 mechanisms we have. There's monthly close and reforecast. So reforecasting the business, understand on a monthly basis, are we tracking ahead or behind plan, which again will inform, do we add resources, subtract resources, or reallocate. Second, monthly business reviews, which are with the finance team and the business partners. So it'd be like the head of CX, head of sales, and so on, where they're looking at like OKRs, how are we tracking relative to those, looking at the very detailed operating metrics of their function. Definitely there's a finance portion of that, but it's also just like we need to run the business. And again, that's largely within the function with some support from finance. And then there's the quarterly business reviews, which involves the executive team, where those are heavier weight planning cycles, which are saying, okay, we now have 3 months. We see how we're progressing against plan. We also should, at like some cadence, for us it's quarterly, evaluate whether we should make more material shifts of resources between teams, and also think about initiatives cross-functionally that need executive sponsorship, and that's when we take care of that. So that's kind of like the high-level architecture that we use. And then within that, you have a lot of like ad hoc decisions that get made, but that's kind of the scaffolding that we give to the org to help manage the business.
That's awesome.
Yeah.
How about Glean?
I mean, aspirationally, this is what we'd love to do, but we're a little bit earlier on in our journey. I'd say, what's interesting for us is like a lot of our operating rhythms are really centered around 2 things. Like one, annual planning, of course. Our second half replan, there's sort of like 2 big check-ins that we do. We set the plan at the beginning of the year, and then halfway through the year, we sort of evaluate, like, are we on track? Where do we need to adjust? But a lot of the operating cadences that I find to be most effective is actually around board meetings. I feel like board meetings are just like a really great forcing function to get all of the executives and the leaders together to articulate sort of how are we doing and sort of what is our strategy. I think there is something to this idea that the board meetings make the executives have to really reflect and focus on their business and sort of report the metrics that matter. The metrics that they end up reporting are ultimately like the metrics that I think get presented to the rest of the company. And those are the metrics that I find usually get a lot of focus and get moved. So, I would say a lot of the operating cadence really is around that. And there's just, I think, a lot of like value in just having a really, really good, robust board meeting, good board decks, good materials. Like that kind of serves as our like QBR almost to a certain degree.
Yeah, and I think like what is kind of being illustrated between the different approaches, like I think Rippling looked a lot more like that like a couple years ago. And I think the thing you have to be really careful about, I even like cringe a little bit myself when I hear about all the processes that we have, is you want to be very careful around introducing processes that don't have value, that slow things down. So it's like really the framework is companies are prepared or require different processes at different stages of their life cycle. And then you as a finance leader, if you're introducing that process, one, have to understand, is there desire and acceptance from the org for that process? And it may be you roll out, a team's like, hey, like we're not getting any value out of this. We're not making any decisions based on this. And you're like, okay, not ready. Like we'll revisit at a later date. And then also I think periodically on every 6 to 12 month cadence, look at your processes and see, hey, like what can we cull back? What are the things that we should reevaluate to make sure that you're, again, kind of keeping process at the bare minimum, but enough to ensure that things stay on rails and ultimately you're driving things in the most efficient way that you can.
Yeah, I do work with a lot of early stage first time founders. And when the conversation of like, when do we do board meetings? Like, what stage does that come up? I do think a lot of the benefits that you highlighted aren't obvious at first, right? It's like, oh no, I'm just gonna have to make this really complicated PowerPoint. And the only reason is to share it with probably a board of 1 or 2 external people. In reality, it's a great forcing function. And it's awesome to figure out what do you really care about? Can you fully measure that at a high degree of fidelity? What are the real goals for the year? Like, let's be really intellectually honest about what's going on. It's something that I think should happen for most people around Series A, but obviously some exceptions.
I mean, I think at Glean, we used to take it to the extreme. Like, we used to have all of our employees tune into the board meeting. It was live streamed to the entire company for the longest time.
No way.
As you might imagine, it is hard to have a honest conversation about the business when everyone is watching. And also, it turns out it's a compliance risk to have 1,000 people tune in. So we pulled that back. But at Glean, we still share out the board decks and the board notes to the entire company. It's not just a way to sort of organize the execs and the leadership team, but it's also a great way to disseminate the company's strategy to the rest of the company, right? So we use it and we take it very seriously, and it is one of these things that I think if you can nail it and get it right, it's such a great thing for operating and running your business.
I'm actually curious, what finance leaders and companies do you look up to? And it doesn't have to necessarily be a private company. Any lessons or?
Yeah, what are like high functioning finance orgs out there that you're like, man, these guys are good?
Yeah, so I mean, we've chatted with a handful of finance teams. I think one that's pretty impressive is Snowflake's finance team. Reasons for that, I think one, from a forecasting perspective, they have a usage-based model, very complicated, and I think they have like a very good mix of humans, but also data scientists to think through how do we project out usage, how do we do that in an automated way. I'm probably oversimplifying it, but I think at one point the CFO had like a button that he just like pushed refresh every day with the outlook for their business, and it also rippled through the like long-range plan based on what they were seeing with usage from their customers. So I think that's like one piece on the top line, but we also chatted with them actually on the R&D side, and really understanding actually for platform costs, which are very important, increasingly important now with the scaling up of AI and other things, to understand that at a really detailed level and be able to map it to specific products. So it's not just like one line item of like AWS. It's like, hey, AWS is supporting all these different products. We have locally shared services, globally shared services. We need to like map it in a very specific way to understand the economics of the product and also forecast the business properly. And so they have an internal system where they've done that, mapped it all to all their different sub-functions, and then nominated budget captains and have the rigor in place to kind of balance like, hey, new feature development, growth versus teams investing in things to drive efficiency. And actually, what was interesting to me is they combine budgets for R&D headcount and platform costs so that teams can make the trade-off of we're going to invest in additional R&D headcount to drive efficiency in the platform, which is actually pretty unique. We haven't gotten there yet, but I thought was pretty cool.
I think for me, I would pick OpenAI's finance team. And I would say that because of just, one, I have a lot of friends, ex-colleagues that currently work there. So I think very highly of that entire team and the talent they have there. But two, like, I think just the way that they use AI day to day and actually like closing the books or forecasting the business, I find that like very inspirational and something that I'm constantly pushing my team to do. Very early on, like I heard that, they got their like close for like such a massive business to like 1 or 2 days by using like AI. Like you have accountants writing Python using ChatGPT. Like I think that's just really, really cool. And I think that's kind of where the future is going, right?
Can you say more about that actually? Like what is areas of AI that you're excited about in your respective realms or domains?
Yeah, I mean, we use it a ton. One thing that we use AI for is like cleaning up Salesforce data. Like it's probably more solved at Rippling than at Glean. But there's this whole process around when a rep closes a deal, making sure that it is accurately, logged in Salesforce. Before we started using AI to automate it, it was like this like super manual thing. Like at the end of every quarter, literally my team and we would sit in a room and just like check order forms to make sure that the ARR that we were reporting to the board was accurate. But it turns out it's just an AI problem, right? Like when a deal closes, like you can use Glean to build an agent to check the order form, OCR it, make sure it matches all the correct fields within Salesforce. So it's stuff like that. The thing that's actually been quite helpful for my team is just, like we actually did this like AI hackathon about like a month or so ago, where literally we all just got into a room, we carved out a whole afternoon, put down the ramp card and said, buy whatever like AI tools in addition to Glean, and just build something useful. I thought that was really, really helpful because I think just a lot of really like rote things that we were doing, we just realized we can automate through like Glean and other AI tools. That was really helpful. So it's a lot of different use cases.
I like that.
Yeah.
Yeah, I mean, I think for us, like the thing that we did actually using the individual I mentioned who manages systems for us is we nominated him as the AI captain for the finance team. And so he works with the various leads on the team to identify what are the processes that kind of like fit within the things that AI can tackle well. So when I think of repeat processes, it's things like monthly close, reforecasting, so on and so forth. So for monthly close, now we have it all automatically produced in Anaplan. And then when we look at the commentary that's produced, the flux analysis for accounting, all of that's created by AI, which reduces a ton of work for the accounting team, a ton of work for the finance team, and actually allows for accounting more time spent investigating anomalies and things like that to increase the robustness of the financials. And also just because they're closest to the data, they can identify things that even the finance team might miss around like, hey, you might want to look into this or that issue that we're seeing in the P&L. And then the finance team, obviously the fact that the closed materials, the shell is produced automatically, first of all, reduces the headcount of my team, but also again, back to what Michael was saying, where we add value, you can spend a lot more on the value add activities versus just the reporting activities.
So it sounds like if I'm a finance leader at a couple thousand person company, should I have my own AI engineer or systems engineer to like just dedicate it to our team to building things internally? Like, what would you recommend?
We haven't actually required, I mean, it's a very expensive resource to have an internal engineer dedicated to you, and there's all the draw on other things in the company, other cross-functional dependencies that person will have to deliver what you need.
Sure.
So I think for us, largely, we've gotten by with the embedded features in the vendors that we use. So for example, Anaplan has AI features embedded in their product. Same with Workiva and so on and so forth across the finance and accounting function. And then I think there's also just basic things you can do with ChatGPT. And so I think for us, like the default is avoid burdening the R&D team with internal facing efforts because first of all, it's expensive, opportunity cost. Second, these things are cumulative. So it's not like you have an engineer build something and then they move on and do a bunch of other stuff. You now have a tool that needs to be maintained and updated and things like that. So by default, we really try to keep it modular and kind of have the finance team supported by external vendors and then R&D focused on our customers.
Any other external vendors that you'd recommend?
Well, maybe Glean. So I'll buy the Ripley card and you buy Glean. I mean, for us, we actually do that. So we have this initiative internally called Glean on Glean. And in our business, and this is pretty common with most AI companies, there's sort of this like forward deployed engineer motion. We call it something slightly different. We call it AI outcomes managers. And these are folks that, essentially we deploy in our customers to help them build agents, help them build AI workflows. But we also have a group of these folks that actually do it internally at Glean. And it's for a lot of different reasons. One, I think it's actually just great to dog food your own product because like the stuff that they were able to build for us ultimately, can be applied to all of our other customers. So we have the luxury of basically having just like internal resources. One, they're experts in using Glean that will partner with like the sales org, the finance org, marketing to build these agents that are super, super useful, super powerful. That's sort of like how we've approached it because a lot of this AI stuff is like, it's hard, right? Like this stuff is really new. Yes, it's simple once you realize you can just talk to it in English and you can kind of like tell it to do what you want. But for someone who's not deeply seeped into it, like you need a little bit of hand-holding, I think, at this stage of the AI cycle that we are in. And we're fortunate in that like this is a professional service that we offer to our customers, but it also allows us to benefit from it internally. And there's this, I think, flywheel of us building something really interesting internally and then being able to sort of federate it across our entire customer base.
That makes a lot of sense.
What do you guys believe that maybe others, either on your team or other finance leaders, don't believe? Is there any unique take you guys have that informs how you do your day-to-day?
Informs day-to-day. So just to say more on this question. So something we believe about the finance function, about
it could be anything.
At large.
Yeah. Maybe you're saying AI is just not useful for us for the next few years.
A conspiracy theory that you have, that you just want to share with the world. Yeah.
I think like
I love a conspiracy theory.
one of the things that has occurred, at least in our world in software, is this view that, hey, like there's a lot of uncertainty around how AI will impact software. Software is out of favor in the public markets. And then there's this delineation between AI companies and working at an AI company and then working at a software company. And I think it's really important to kind of realize like every company that will be successful in the future will be an AI company. And so when we think about the things that we're building at Rippling, we also dog through the product. There's a lot of AI features that we're embedding in the product, and a lot of exciting things you can do where we are the beneficiaries of the things that OpenAI is doing and other vendors that we can embed into Rippling and deliver value to our customers in a way that we couldn't before. And I think there's some companies, Ramp has done a great job with this, of positioning themselves as kind of like the AI forward kind of like thought leader for the CFO and their specific domain. And I think that you'll see that hopefully with Rippling and other companies going forward. So I think there's this kind of like bifurcation in investors' minds and maybe employees' minds and in customers' minds, whereas I think going forward you'll see these things converge and you'll have successful companies that are the AI companies, and any software company that is not in that bucket won't ultimately exist.
My answer is less sophisticated than that. It's a bit of a hot take, I would say, for someone in finance. I really like Google Sheets. I'm an ex-banker. I grew up with Microsoft Excel. Then I worked, obviously at a late-stage venture capital firm. So I was sort of like a Excel enthusiast. And this idea that I'd be living in Google Sheets constantly still surprises me to this day. But I've just been pleasantly surprised by like how sort of adaptable this tool is. Like the reality for us too is like our business is just changing so much. Like what Glean looks like today is not what Glean looked like 2 years ago when I joined.
Right.
It's super messy. It's not easy to scale, and we're going to get off Google Sheets and have like better tooling. But like, it's been remarkable just sort of like how much it's sort of scaled for us. And I've turned from sort of like a Google Sheets hater to someone who actually quite likes Google Sheets. That would be my non-consensus.
Was it kind of forced upon you, and then you just kind of?
It was forced upon me, but I've grown to love it. Yeah. My team's going to kill me for saying this. They don't. But
are they pushing you on NetSuite? What is the next frontier of past?
I think the next. So we're already on NetSuite, like all that.
Okay.
That we have our like ERP stuff set up. But for us, like the next thing to do is probably to figure out like what is the right planning tool for us, and that's the evaluation we're going through, because we wanted to pick one when the business was sort of not necessarily in a steady state, but wasn't changing so radically, and we weren't adding so many products, and the way you would model the business wasn't constantly changing. We're probably getting closer to that point, but like we're moving into like consumption, and like everything sort of changes like when that happens. So we are currently in the process of upgrading our systems, but this is more of sort of like a lagging view of my love for Google Sheets.
Cool. Thanks, guys. This is awesome.
Okay, cool.
Really appreciate it.
This is great.
Yeah, thank you.
Thanks.